Hey guys, we are on Wall Street discussing portfolio management strategies and how to find multi-bagger stocks and what are the qualities of the multi-bagger stocks. So this is what we are going to discuss in this series, and looking forward for an exciting session. So we will start on how to find, like, first of all, what is multi-bagger stocks and what are the characteristics of it, and eventually how to find them and what are the strategies in the global markets, live from New York. So looking forward. See you guys.
Manish, welcome to the US. So I heard you're going to present something and you're going to talk about the stock market investments today. So what's the plan?
Hey, thanks a lot. Yeah, so we are going to discuss about multi-bagger stocks and how to find multi-bagger stocks, and talk about portfolio management and how to create wealth using small cap stocks in our portfolio, and how do we find these stocks. That's what we are going to kind of discuss, and more in like few hours from now. So see you there.
Cool. So any specific strategies, or what is the kind of stocks that you generally deal with?
Yeah, so we deal with micro cap, small cap, mid cap stocks which have the potential.
So is it Indian stocks or global?
Global stocks we are talking about, mainly like over here in the US context. We will be kind of discussing on the US stocks. So we are looking at $100 million kind of market cap range, and the companies which can go 100x from here in the next decade.
Okay. You see all these NITK folks. Do you think they can really use your strategy?
Yeah, why not? And it's for everyone, and with basic knowledge of finance, you can make some decent amount of money in this stock market.
Okay. So how has your portfolio been performing over the last few years?
Yeah, it has been very good, depending upon the size of the portfolio. If you are looking at a small cap, micro cap strategies, they have been doing extremely well. How to find these companies early on is the key where I cannot go into the picture. And so we will discuss more about it in the session.
Okay. Thank you so much. See you there.
Bye. Thank you. Thank you.
So next panel is Maneesh Nath and Sudhindra. It's a fireside chat on smart investing. So unfortunately, we had planned that for a longer time, but they have like 15 minutes to go over that now. And please welcome Maneesh Nath and Sudhindra.
Good afternoon to you all. So we have here Mr. Maneesh Nath, who is the hedge fund manager here. Okay.
Hello.
So, I want to start. The hedge fund manager. So he is going to educate us about all the other aspects of how he runs his business and all. Okay. Go ahead, Mr. Introduce yourself, Mr. Maneesh Nath.
Hello, everyone. Manish Nath here. Can you guys hear me? Can you guys hear me? Yeah. Okay. Yes. What is it?
Huh?
Backdoor?
Hello.
Yeah, so you can start asking with the questions, because we have very limited time. So.
Okay. See, what's the buzzword? It's a multi-bagger stocks you are going to deal with. Okay, what is this multi-bagger stocks in the stock market?
Yeah. So aim in the portfolio management is to get maximum amount of returns and in limited amount of time. So basically, let's say we are creating 30% annualized return, and how we can increase it to like 40% annualized return. So for that, we should have some multi-bagger stocks. Like now, coming back to the question, what is multi-bagger stocks? So multi-bagger stocks are stocks which can go up 10 times, 20 times, sometimes in case like 100 times in a decade. And how we find them and what are their characteristics is something which we are going to kind of discuss in the next 15 minutes, which we have over here.
Okay, then how do you actually build these multi-bagger stocks in your portfolio? How do you build them? Actually?
Yeah, so I will start from that how these, what are the characteristics of these multi-bagger stocks, first of all. So they are high growth stocks, find in the vicinity of market cap of around $100 million kind of market cap in the US scenario. In Indian market cap, it's around $50 million kind of range. So we are looking somewhere in that range, because if a company is already $100 billion, let's say, in like current scenario, how can it go 100x from there, right? So it's not possible. So the companies which are around $100 million, if they are doing good work and they have a clear strategy, they can become a $10 billion company in the next 10 years. So we are looking somewhere in that range, and it's more feasible over there. So $100 million, so we start from $50 million to, let's say, $500 million. We have almost 1,000 companies in that range. And we sell it based on the price to equity, price to earnings, and your sales growth, your profit growth, your profit margin stability, and so on. And we are looking for not very leveraged company, because there is so huge risk in those companies. And we are looking for companies with clear management, like consistent in their thought process, and like companies which have shown decent performance over the past 5-10 years in terms of their financial, as well as they have huge goals down the line. So the company should have a good product, and the management should be extremely honest and extremely capable, and so on. So these are like some of the characteristics. So based on that, let's say we have 1,000 companies in that market cap range. So we find top 200 companies based on these criteria, and then we go individually, and then we look at these companies one by one and see where, like first of all, like, are they falling in our circle of competence? Like, can we understand that, all those companies? Because it's not possible, right? So we have to know that, okay, where is our limitations and our boundaries and so on. And try to find top 20 companies from there, and then create an equally weighted, like, let's say 5% each allocation. So that's how we create the multi-bagger stock portfolio.
Okay. Now you selected these percentages and all. See, one important term we used, hedging, as the hedge fund manager. How do you hedge these funds so that the risk is brought down?
Yeah, so for institutional clients, what happens is that you can't, let's say the market falls by 30% in a given year. The portfolio cannot fall that much for institutional investor. That's a huge amount of loss of capital in that particular case. So hedging techniques are required. So hedging can be done based on shorting the stocks, shorting bad stocks, and shorting the indexes sometimes. So when the market is going up, everyone is making money. Your longs are doing exceptionally well. So short happens when like the short starts making money when the price actually falls down.
Okay.
So you are making some money on the long side, and then if the stock is going down in a downward market, you will make some money over there. So that's how it kind of hedges out. And that's what the hedging is. There are several techniques, but these are like some of the common ones.
Okay. Yeah, under these conditions, some stocks go up, some stocks will come down and all. In US industry, which are all the type of investment you would like to do under the US markets now?
Yeah, in the US market, I like tech industry. I like healthcare, pharma, because of the boomers coming into the age, and will be needing a huge amount of these services. And tech, because the world is kind of going digital. So these are like some of the industries. But yeah, there are many other industries, but these are some of the prima facie, like, which we kind of like.
Okay, thank you for telling about all these things. Now what I want to know is that you are going to diversify these funds into Indian, American and Chinese. Okay, so which of the market is good for the long-term wealth creation, and how do you decide about it?
Yeah, so if someone is looking for stability and not looking for very high returns, then US can be a good market. If someone is looking for very high growth, then India and China is obviously there. And I advise people to kind of go for like global strategy. So have a mix of all three, and that's where you kind of get a balance of both in terms of like US companies are very low risk, and in the Indian context, obviously like the risk is higher, like we have a country risk over there. So those risk premiums are there. But overall, having a balanced portfolio is what kind of creates the difference.
Thank you, Maneesh Nath, for telling us about all these things. Anybody has got any questions, you can just raise it now.
Right. Yeah. I kind of advise like family offices and all. Yeah.
just, you understand what I'm saying? Like, when I
in US in funds, like that, I pick different groups of funds and they have pathways of growth. Do you have that in your system for your funds?
Yeah, like we cover like US markets, European markets, as well as the Indian markets. Yeah, so we can kind of have a talk on that. Yeah.
Okay.
So basically what I understand is you deal with the PMS kind of an investment, not through the mutual funds.
Yeah, like PMS is more on the advanced side like compared to the mutual funds. Mutual funds are more like plain vanilla long only kind of funds, whereas in PMS there are some strategies which you can use. So just like hedge funds are like the most advanced versions where many different techniques are kind of used to make money in the stock market.
Yeah. So you spoke a lot about shorting, right, as a hedging technique. So during the pandemic around 2020, so GameStop was a huge topic here in the US because their stocks were shorted. So how is it different in US and in India when it comes to shorting as a technique?
Yeah, like GameStop was a kind of a story. So what actually happened in GameStop was that many funds were short on GameStop. Well, that's a different topic altogether actually, like whether shorting is good or not. But this is like hedging is basically where you have long positions and you have some short positions, and that basically you kind of hedge out. But there are some funds who are specifically just for shorting. So the GameStop falls into that category. So it's not what we are discussing here. We are kind of discussing that you can short on like bad stocks as well as you can short on indexes just to preserve your capital. Otherwise, if the market falls by like 30-40% in a given year, let's say there is some war going on and all of a sudden something happens, then the markets will fall by 40% and you can't let your portfolio fall by that. So to preserve that, your capital, you use some hedging techniques. So this is different, but I know what you're saying. So in Indian context, only on the big stocks, not on the small stocks where you can short, and it's not available for shorting. But in US market is very advanced markets, which is where they kind of, so there are some players which drive companies' prices down and after shorting, and also it's a very different topic altogether. It's for a different session.
Okay. Yeah.
Selling covered calls or selling puts or
Yeah, like people can use options and futures for kind of creating wealth, but if you have very good knowledge on the stock market, on how to find good companies which can go like 10 times, 20 times, as I said, like sometimes even 100x, then you need just a couple of them. So that's it. Out of 20 stocks, if 2 of your stocks cannot do extremely well, then you have all you have to do is just wait and watch, and and that is why I am more focused on the micro cap and the small caps rather than going on with the large caps, because the large caps, like the growth has already happened, and max it can go is like 10x in a decade, whereas we are looking for 100x more than that. So that can happen only like mathematically it's possible in the $100 million kind of market cap range, or like sub-$1 billion. In the US, in the Indian markets, it's around 1,000 crore market cap. Actually even less. I try to find companies in the 200 CR kind of market cap, so which is very less, and that's where the expertise level is required, because it's like going and deep diving into an ocean and trying to find for gems over there. But as we go deep down the ocean, you know what happens. Like there is an extreme amount of pressure on you, so it requires a huge amount of skills and experience and track record to kind of find that. It's not for everyone.
Yeah, you were based in India or here?
Yeah, I was in US and I worked in New York for quite some time, and then joined a US fund investing into Indian equity markets. So, but now I invest globally. So yeah.
Okay, thank you.
Any other question? Thank you, Mr. Man.
Can I go? I got two questions. I mean, many of us are moving into the retired type of age. So the financial advisor always tell us that, okay, go for 60-40 equity versus stock versus fixed income. What is your suggestion?
Yeah,
You know?
actually, it's a very good question because basically what you are asking is about like how much to invest in the stocks versus bond. I guess like, this is the question, right? And
Right.
there is one more question to it is that out of those stocks, how much should be in the small cap, mid cap, and large cap, right? So we will kind of address like the first question as you have asked. So the first question is that okay, how much should be in the stock market, how much in the bond? So I think what you said is right. 60-40 is a good parameter all the time. It's all about your expertise level. So if you are a novice and and you are, let's say, more than 65-70, so either you go to the professional or you go with the mutual fund route, or don't kind of risk it. Basically, that's stay on the preserving side of your capital, which is very hard on throughout your life, right? So that's the point number one. But if you have some experience, if you have gained some success in the past, then you should go aggressive also. You can. So it depends actually. So now coming to the second part, that should you go into small cap, mid cap, or large cap? So I always tell that if you have something planned for you that you want to kind of pass your portfolio to your next generation, then you can have small cap over there, small cap and mid cap. Whereas if you are not very you can't kind of tolerate the ups and downs of the markets, then you should go with the large caps because you will not be able to handle the turbulence in the market. Because, as I said, it requires a lot of experience. So bonds, they are always not that good experience, but yeah, like not that good investments obviously, but we have to have that. In my case, I have kind of developed that expertise over the last two decades. So yeah.
There is a thumb rule for this. Whatever your age, 100 minus your age should be in equities. Rest of that should be in the debt market.
Right. So that's what like 60-40, like let's say is 40. And,
yeah, Maneesh. Sharad Nagaich here, just following up on the question from the previous gentleman.
Hello, sir.
We are moving, we are at that age where we are going from more value investing versus growth, right? My understanding, your focus is very much on the small caps and mid caps. How is the market for stocks that pay dividend in India?
Yeah, so dividend paying stocks are, yeah, we have there in India, and some PSUs are there, some government companies and some very standard companies are there which provide decent amount of dividends. Yeah, but your portfolio size should be very big if you are relying on your dividend income, because it's not more than 2% on a portfolio level. So let's say you have a 1 crore or like a $1 million kind of your total assets. So it's not much, right? So you should have, if you are an institutional investor or you are a family office, then yeah, dividend investment makes sense. Dividend like investment going, because they are very boring companies. They are just for the they just provide dividends, and it's mainly for institutional investors actually who can't face any turbulence because they have to answer over there in their departments that okay, what happened to the capital, so they will play safe. But if you have that knowledge about small cap and mid cap, then obviously it makes sense to take some chances over there, and if you hit like a couple of jackpots, then you make decent amount of returns.
Okay.
So
thank you.
So if you want to invest in Indian equity and mutual funds, we will take off the record later on after the session is over. Okay, fine.
okay. Thank you, sir. In case if anyone has any questions, they can contact me. I am here till tomorrow.
Thank you, Maneesh. Thank you.